goods sent on sales or return basis adjustment. This is one of selling methods, and goods sent to the other business on sales or return basis. At that situation, you have to know how to record in the ledger accounts and financial statement how to disclose. This is one of selling methods. Goods sent to the other business on sales or return basis. Right. In the business point of view, at the time of send, should not be recorded in the ledger accounts. The business will maintain information about goods sent on sales or return basis only memorandum. Cannot be recorded in the ledger accounts. But think about this one. When the trade information that goods taken on sales or return basis has been sold, or when the time period allowed for its sales has been expired, think about there are two situations. When the trade information that goods taken on sales or return basis has been sold, or when the time period allowed for its sales has expired, the value of such goods must be accounted as a credit sales. This one very important. Think about situation. This is first one. When the trade information that goods taken on sales or return basis has been sold, or time period allowed for its sales has been expired. In this situation, it should be recorded as a credit sales. Debtors account debit, sales account credit. But think about this one. When goods has not been sold as end of accounting period, and when expiry date has not been passed, cost of relevant goods must be added to the closing stock. If those are not sold, its cost value should be considered as a closing inventory. This is the theory. If those are sold, it should be recorded as a credit sales. If those are not sales, its cost value should be considered as a closing stock. If those are sold, its selling price should be considered as a credit sales, selling price. But if it has not sales, its cost value should be considered as a closing inventory. However, if such goods have been recorded as a credit sales already by mistake, then it should be removed. Therefore, sales account debit, debtors account credit. Think about not sales, but all recorded as a credit sales. Those are not sold at the end of the accounting period, but already recorded as a credit sales. First one, its cost value should be considered as a closing stock. And second part, its selling price should be removed from debtor and sales. Very important adjustment. If it has given sole proprietorship sum, any organization, this adjustment should be done from the beginning. Reason it is effect for debtors, sales, as well as inventory. Now see the example. First one, trial balance is given as at 31st March 20, and it has given data, it is equal trade receivable and sales available in the trial balance. Think about additional first one. This adjustment relevant for debtors, sales as well as inventory. Think those three areas. Goods sent on sales or return basis. This is the cost value, 40 million. And its selling price is given 60 million. Goods sent to the other business on sales or return basis. It cost value 40 million. Its invoice price, selling price equals 60 million. It has been recorded as a credit sales. This is an important point. Already it has recorded as a credit sales. Think it means it has included already debtor and sales. Which value? Selling price, not cost value. Therefore, 60 million included already debtor and sales. But now think about at the end of the accounting period, what is the situation? At the end of the accounting period, that it was revolved 1/4 of goods were remain out of sales or return by stock. 1/4 not sales, remain out of sales or return by stock. Think about at the time of send, it has recorded already as a credit sales. 60,000 included data and sales, but end of the accounting period, 1/4 not sales. It means 3/4 sales already recorded as a credit sales, but total value cannot be records, should not be records. 1/4 not sales. And time period also was not expired. Think about it is effect for all recorded as a sales, credit sales. Therefore, it is includes debtors and sales. Debtors account debit, sales account credited. And second part also think about cost of inventory. It has given 92,000 as at 31st March 20 and net realizable value also given 90,000. Those are the inventory available at the store and goods sent to the other business. If it has not sales, its cost value also should be considered as a closing inventory. Right. Think about it has recorded as a credit sales 60 million, but 1/4 not sales. Therefore, based on selling price, 1/4 should be removed. Think about based on selling price equals 60 million. Think about values in 1000, 1/4 not sales. Therefore, 1/4 equal 15,000 not sales. But total value recorded as sales. 60,000 included debtors and sales, but it 1/4 not sales. Therefore, when we are going to calculate correct sales value included in the trial balance equals 640,000. From that value should be deduct 15,000. Reason not sales. Recorded already 60,000 as a credit sales. It is included debtors and sales, but 1/4 not sales. 1/4 equal 15,000. That value should be removed from debtor and sales. Therefore, can be calculate correct sales value equal 630,000. This is the correct sales value. Values in 1000. And correct data value also they ask. Trial balance it has given data values. Debtors it has given trial balance 125,000. Debit side. From that value also should be removed 15,000. It has already recorded as a sales. Therefore, debtors account, debit, sales account credited already 60,000, but 15,000 should be removed. Therefore, correct sales inventory value equal 100. Correct data value equal 110,000. Recorded already as a credit sales, but 1/4 not sales. Based on selling price, 1/4 should be removed. Debtors account credit, sales account debit double entry. From debtor and sales should be deduct 1/4 based on invoice price. And it is effect for inventory also. If it has not sales, recent goods sent to the other business. If it has not sales, it cost value available other business. But it write as a business, our business. If it has not sales, it cost value also should be considered as a closing inventory. Therefore, think what based on cost value equal 40,000. Based on that value, 1/4. Based on cost value, 1/4 equal 10,000. It should be considered as a closing inventory. Therefore, cost value of inventory, this is the inventory available at the store. Then cost value 92,000 plus 10,000. Therefore, total cost value equal. Think about cost value of inventory. Cost of inventory. Cost of inventory equal correct cost value equal 92,000 plus 10,000. If it has not sales, its cost value also should be added. Therefore, this is the correct cost value of inventory. And correct net realizable value of inventory. Correct net realizable value of inventory equal net realizable value of inventory at the store is given 90,000 and 10,000 also should be added. Therefore, this is the correct net realizable value of inventory. Now see the requirements. It is effect for inventory adjustment also. There's correct inventory value in for the year end 31st March 20 included under cost of sales calculation. Based on matching concept, under cost of sales calculation, as inventory should be included, cost value of inventory equal 102,000. Based on matching concepts, cost value of inventory. And it is given included under financial position. Under financial position as inventory should be included based on prudency concepts, lower value of cost and NRV. This is the cost value and this is the NRV. Then low amount should be included under financial position under current assets. Therefore, here low amount equal 100,000. And stock written off if NRV lower than the cost value. Think about net realized value equal 100,000, cost value equal 102,000. If net realized value is lower than the cost value, difference value is stock written off. Therefore, in this example, stock written off equal 2 million. Think about there. It is effect for inventory, debtor, and sales. Recorded already as a credit sales, but 1/4 not sales. Therefore, based on selling price, 1/4 should be removed from debtor and sales. And second part, based on cost value, 1/4 should be considered as inventory. It has given inventory cost value as well as net realizable value. This is inventory available at the store. Goods sent to the other business. If it has not sales, its cost value also should be considered as our inventory. Then see the second example. Try to recognize recorded or not. Then think about at the end of the accounting period, sales or not. It has given trial balance 31st March 20 and debtors balance available, sales it has given balance. Goods sent on sales or return basis, this is the cost value. And invoice price means selling price. This is selling price. At the end of the accounting period, that it was revolved 1/4 of goods were remain out of sales or return based stock. Were remain out of sales or return based stock, it means not sales, 1/4. In this example, not given clearly recorded or not. Think about this example. Question number 1, it has given. It has been recorded as a credit sales. This is important thing. But question number second one, it has not given here. If it has not given, it has not recorded. Normally, at the time of send, should not be recorded in the ledger accounts. We have to write note for that. In this example, it has not given clearly recorded or not. If it has not given, it means it has not recorded. But end of the accounting period, 1/4 not sales. Now think about not recorded, but not sales 1/4. It means 3/4 sales. Now think about based on selling price, you have to consider not 1/4, you have to consider 3/4. Reason not recorded, but not sales 1/4. It means 3/4 sales. And given inventory also, time period also not expire. And inventory available at the store, it has given. Cost value is given. Net realizable value is given. Think about goods sent on sales or return basis. It is effect for debtor, sales, and inventory. Right. Then it has not recorded yet, but 1/4 not sales. Therefore, from the beginning, based on selling price, now you have to calculate 3/4 into 3/4, not 1/4. Reason 1/4 not sales, it means 3/4 sales. Therefore, here 3/4 value equal 90,000. Therefore, this value should be recorded as a credit sales now. Therefore, this value should be added debtors and sales. Debtors account debit, sales account credit. Not remove now. Reason it has not recorded, but 3/4 sales. Therefore, now based on selling price, 3/4 should be calculated. It should be recorded as a credit sales. Therefore, now not remove, should be added. Therefore, debtor value should be added 90,000 and sales value also should be added 90,000. There's correct sales value. Therefore, sales available trial balance 810,000 then plus 90,000. Not remove now. Reason it has not recorded but sales. Therefore, correct sales value equal rupees 900,000. And it is effect for data also. Effect for data increase. Debtors account debit, sales account credit should be recorded as a credit sales. Therefore, debtors available in the trial balance 210,000 and 90,000 also should be added. Therefore, correct trade receivable data value equal 300,000. And based on cost value, 1/4, not sales amounts. Think about effect for inventory 1/4. Reason those are sent to the other business. If it has not sales, those inventory available in the other business, but it write as our business. Therefore, effect for inventory based on cost value. Think about cost value equal 80,000. This value based on that value 1/4. 1/4. Therefore, 1/4 equal 20,000 effect for inventory. Think about effect for inventory if it has not sales, not 3/4. But effect for sales and data here 3/4. Reason not recorded, but not sales 1/4. It means 3/4 sales. Therefore, 3/4 based on selling price should be recorded as a credit sales, and based on cost value, 1/4 should be recorded as a closing inventory. At the same time, think about cost of inventory. It has given cost of inventory at the store equal 120,000. For that should be added 20,000 also. Therefore, this is the correct cost of inventory. And net realizable value of inventory. Net realizable value of inventory also given 118,000. Then add 20,000 for that value also. Therefore, this is the correct net realizable value equal 138,000. Now think how to disclose on the financial statement. There's correct inventory value for the year end 31st March 20 included under cost of sales calculation. Under cost of sales calculation, based on matching concept, cost value should be included. Therefore, here cost value already calculated. Correct cost value equal 140,000. Correct cost value equal 140,000. Based on matching concepts and based on prudency concepts, and the current asset in the statement of financial position should be included low amount of cost and NRV. Here low amount equal, this is the cost value, correct cost value of inventory, and this is the correct net realizable value of inventory. Therefore, low amount equal 138,000. That is a value should be included under current asset. If NRV lower than the cost value, if net realizable value is lower than the cost value, then difference value is stock written off. That value should be included under other expense in the income statement. Value equal 2,000. Stock written off should be recognized if net realizable value is lower than the cost value. In this example, here difference value equal 20,000. But if NRV higher than the cost value, difference value should not be considered as a stock written off. Think what very important. There are two things you have to know. First one, try to recorded or not. Example 1, it has recorded, but 1/4 not sales. Example 2, it has not given clearly, recorded or not. If it has not given, not recorded, but 1/4 not sales. They got 1/4 not sales, it means 3/4 sales. Therefore, based on selling price, 3/4 should be recorded as a credit sales. Debtors account debit, sales account credit. Therefore, that value should be added both debtor and sales. Therefore, this is the correct sales value and this is the correct debtor value. As well as based on cost value, if it has not sales, it write as our business. Therefore, based on cost value, not sales amount should be considered as our inventory. It should be added both cost value as well as net realizable value. Then calculate correct cost value and correct net realizable value. Could send on sales or return basis. This is the theory. Think about at the time, this is one of selling methods. at the time of send on sales or return basis in the business point of view should not be recorded in the ledger accounts. Just you have to write note for that. But when trade information that goods taken on sales or return basis has been sold or time period has been expired, it should be considered as a credit sales. And with when goods have not been sold or time period was not expired, its cost value should be considered as a closing inventory. If it has recorded only as a credit sales, that value should be removed. Very important adjustment. If it has given any organization, it may be sole proprietorships, partnership or company, this adjustment should be done from the beginning. Reason it is effect for data, sales as well as inventory.